I got Doug Lawrence in the house. Hello, Doug.
And a fine good morning, sir. How are you?
Man, if I was any better, I'd be you. Are you kidding me?
Oh,
Well, we're going to do something a little different today. Okay, we've
okay.
been we've been highlighting a lot of property, and I love that because it lets everybody know what's going on in the Chattanooga, North Georgia area. Um, but I want to ask you a couple questions and to lead us into this.
Sure.
So, all right. So, how long have you been in real estate?
20 plus years. Yeah, a long time.
Long time. Okay. And same here. I'm in my 24th year of doing mortgages now. Uh, and honestly, and I say this, and I truly, truly do mean this. I can't imagine doing anything else, Doug. I really can't. Uh,
It's been very rewarding for us as well.
but what we're talking about today, because we are in times that you and I have seen before, okay? But not everybody out there has seen the market the way it is, okay?
Sure.
I'm going to start by saying this. I still think it's a great time to buy. Yet,
Absolutely.
and there's something that's really, really, of course, it stays fresh on my mind. The average rent right now, Doug, is $2,500. That's across the United States. $2,500 a month for rent.
And that's probably what, a two bedroom, two bath apartment somewhere or house, or is that a
It's,
3-2? Do we know what it is?
it is a is a 2-1. I saw one the other day that was a 1,500 square foot, one bedroom, one bathroom. The porch on it was about that big, and it was $2,000 a month.
Was
Um,
that in this market or was that in?
that was
But
in a
again,
different.
they're all pretty much the same. So go ahead.
That's right. That's right. But if we think about, and let's call it 2,000, even at $2,000, that's $24,000 a year of wasted money.
You'll never get it back.
They never get it back. And what's our average sales price right now?
In our on our team, we're doing about $335,000 per unit here in Chattanooga.
Okay, 335,000. And I'm going to bring my calculator 335
Sure.
times, and I'm going to go 5%, and we're tracking better than 5% right now. That's 16,000, almost $17,000 a year in equity growth
Oh,
still
yeah.
today.
Yep. Yep.
Okay. The reports that are coming out, equity is still growing in that 6 to 9% range, average across the country.
It's still a proven best investment ever.
It still makes sense. So tell us what you're facing with you and your team.
Well, our pipeline still looks good. I mean, Chattanooga is a vibrant, growing market. We've seen improvements in inventory, but those improvements, Kevin, have been primarily in the, let's say, the over 800,000 price point. I mean, looking at the average buyer today, when we're talking to first-time home buyers, right? They're looking at, I would love to find something two bedroom, two bath under $250,000. Well, today we've got 244 of those in the entire MLS, like from Dalton almost up to Knoxville, right?
Right.
So that's less. That's like zero point 0.8 month supply for us in that price point. So with all those people competing for those 244 units, but now this is from 0 to 250, so you've got investors in there.
Right.
You've got first-time home buyers. You've got people who are looking for a second home for an investment property. So that makes it difficult. So now if I look at my price point from 250 to 400, that gives me a little bit better inventory situation because now I'm up to about 540 homes. But
Okay.
yay, 540, that's still only a 1.5 month supply of inventory.
All right.
So
So time out just there
sure.
because I understand what it means, but I want you to explain months of inventory. Explain that term. If
Okay,
somebody
well,
if somebody doesn't know what that means in
sure.
layman's terms.
Sure, and forgive me, all of those
No,
listeners. So
no,
when I calculate month supply, I say, okay, what did we sell the last 12 months in this particular market? Okay,
no.
so let's take a look at that 250 to 400 price point. In the last 12 months, we've sold 4,178 homes priced from 240 to $400,000.
Okay.
Now, if I take that number divided by 12, that gives me a 348 average sales per month that we've sold in the last 12 months. Now, this morning, I've got 540 units that are shown as active in my MLS. So I take that 348 units and I take my 540 actives and I divide that by my monthly sales rate of 348, and that just simply gives me a 1.5 month supply of inventory based on my last 12 months of sales.
Right. Okay.
So and that's how I have to look at everything, saying, okay, why are we having difficulty finding homes for all of these buyers? Because buyers are still pretty plentiful out there, especially in the under 400,000 mark, right?
I've got over 60 that are approved and shopping right now.
Yeah.
Right now, across the board.
And their issue is inventory, I'm sure. They're coming to you saying, Kevin, I just can't find the house. We're coming from Nantucket, right? And we're here in Chattanooga. We love it. We've got to find something. My husband or my wife, they're relocating here. We have to find a home. Now we're looking for a rental because we can't find a home. But my gosh, the rentals that would equate to the home we're trying to find are $4,000 a month. We got to find a home. And rates, and then other people will say, well, we're going to wait for the rate. These are still historically wonderful rates.
Yes, they are. I think what has happened is we just got spoiled. And it's amazing we got spoiled in about a 2.5 year period. Okay.
Yeah.
It's not like we had those type of rates for the last 10 years. We had them for the last 3. Now, 3 or 4 years ago, they were fantastic in the 5s. But what we've seen the last 2 or 3 years, that was absurd in our thought process of getting back to that. I say
it's an anomaly we'll never see again.
I don't think so. I don't think so. But I'll tell you what we do think, and people ask me all the time, how is this inventory going to be fixed? How's this inventory problem going to be fixed? And in my layman's term, and I think what we're going to see, because inflation has peaked, okay? We hope the recessions is here, okay?
Right.
So 11 out of the last 12 recessions, home prices have stayed the same or gone up. Only one recession in the last 12, prices dropped.
Right.
And that was 2007, 2008, because the bubble caused the recession. It wasn't the recession that caused the bubble.
Correct.
Right? So it's a completely different line. But I think what's going to happen, we are going to see rates come down. It is a proven fact because it follows it historically. It follows inflation. It follows recession. So we are going to see better rates. And once we do start seeing better rates, because I still think, and we've talked about this privately.
Sure.
In a rising market, it's really, really difficult because everybody's shopping and comparing. And I mean, it gets crazy. But you know what, Doug? In a falling market, and I'm talking rates, in a falling rate market, same thing happens. Everybody's looking for that better deal. And I can't wait till we kind of get on an even plane where we're staying the same for a while, because then people will settle down and we can get back to business. Okay?
Absolutely agree. The thing that concerns me, or concerned me actually when we were seeing interest rates is, 2%, 1.9%, 2.5%. Mm-hmm. That was great for the real estate market, but it destroyed every other fiscal tool out there. And we know that the entire economy, the world economy, rotates around fiscal tools, not just a piece of property in Chattanooga or in Dubai, whatever that might be. Right. So now if we could stabilize rates to a reasonable rate, and these are reasonable rates, we all have to say, hey, historically, these are pretty good.
That's right.
Now we can see other investment tools, even savings accounts, throwing off some better income. So although we all love in the real estate industry a 2% mortgage rate, it has a detrimental effect economically speaking. So I love a stable rate, even 6%. I mean, 6 to 7%, sweet spot, really. When you're borrowing money at $6.75 a year, that's not bad.
It's not bad. I mean, it's really not. And you hit on something that is so powerful. Okay. Um, because when the economy is really, really bad, our rates are really, really good. And we want a strong economy. We
Yes,
we want the entire. We don't want the problems, um, but we can't have it both. We
you can.
cannot have it both. Uh, do I think that we're going to see what we saw in the '80s? No, I don't think so. Do I think we're going to see what we saw 3 years ago? No, I don't think so. But I'll tell you what we are doing as a company, every closed loan that we have, and we've kept this going. We cut it off in December and we said, no, we're going to carry it on another year, is giving everybody a certificate that we'll refinance them at no cost, Doug, for the next 5 years because we know the rates are coming down.
Sure,
But
sure.
what I think, when we were talking about the inventory, what I think is going to happen is once we can get back in the mid fives, which we think it's coming,
Okay.
once we get back in the mid fives, people are not going to be freaking out so much as far as buying the next home. Okay.
Right,
They may,
right.
like Sherry and I, we're sitting on probably $350,000 worth of equity. Well, I'm not touching it right now. I'm not going to touch it until I am forced to move away from Chattanooga, and I'm not leaving Chattanooga, baby.
I know. I
Yeah,
know. But if
that
you do, I've got people that want to buy your house.
is that the truth? So I think, and my conversations, okay, are different ways to structure loans. Okay,
Sure.
it's a different way of looking at it financially. Uh, we got three contracts over the weekend, and two of them we've completely different structured it different than what we were looking at even 4 and 5 months ago when they started the search. Okay,
Right.
um, because we're making financial decisions, and I say it all the time. It's about sitting down and analyzing your your today position and what you want 5 years from now,
Hmm.
and
Hmm.
how do we get there, and if we can take a little bit of this money and put it over here, it makes financial it makes financial sense. um,
So, in talking to our clients and to our buyers right now, and again, they're all starting to settle down and accepting today's rates, and because we counsel them looking again historically, where we can say, okay, let's look back to 2015, 2016, when rates are pretty similar to what they are right now.
right.
Housing market was still strong.
Mhm.
Just because rates go down doesn't mean inventory goes up. It just inventory pretty much stays pretty stagnant, right? And sales rates do do move as a result of rates. But for the most part, the real estate industry stays pretty stagnant from a standpoint of homes coming in the market, homes going out of the market. So it's just a matter of waiting, but it's also a matter of preparing properly to finance your home. Some
That's it.
people are resistant to say, well, I want to put 20% down because I don't want to pay that PMI. Well, you and I have had many discussions about PMI and what's it really cost. So how would you counsel my buyers right now with respect to PMI?
Oh, great question. And we talk about this every single day. If I've got a family that's coming to me and they say, we've got to put down 20%, I don't want the PMI, but I'm going to take that extra 10% out of my 401k, okay,
Yeah.
or out of
Oh,
a money mark or a money making instrument,
asset.
okay.
Right.
What we're doing is sitting down because the way PMI works, it's based on 5% increments. Starting at 5%, it's higher. 10% is lower. 15% is lower. 20% is gone. Okay, but you take an A plus buyer, somebody that's got a 720 or higher credit score. You're looking at PMI on a average. Let's call it $335,000 home with 10% down. You're looking at PMI of less than $50 a month.
Yeah.
Now, Doug, I don't know about your math, but my math tells me to save $50 a month, I'm not taking $30,000 out of a investment account or a 401 that's now finally making money again
Right. Right.
because at 10% down, they're only going to have PMI for 2 years.
Yeah.
2 years. So that's what
1200
six
bucks.
$1,200.
Yep. Yep.
Come on, $1,200 to save 30?
Yeah.
No. Or 30,000 to save 1,200? No way.
Yeah.
No way.
Yeah.
Uh, be, it's that type of conversation that we've got to have.
Yeah,
So,
and money is still cheap historically. Again, we go
oh,
back to and you're buying an appreciating asset
mhm.
for the most part. I mean, again, that's
So,
not a nobody can guarantee that this home that you're buying for $400,000 is going to be worth $450,000 in 18 months. But at the same time, historically, again,
that's it.
we've never seen crashes. We've never seen strong deflation in housing prices or depreciation
Right.
without some very bizarre circumstances.
So, you asked me the question. All right. So, what are you telling your people? What are you telling your buyers that are coming into this market or that are thinking about, because right now we're seeing a lot of people still move here. Okay.
Oh yeah,
Um, what are you telling your people?
we got we got to find the house. Well, first of all, the perfect house isn't out there. Okay, unless you build it, and that'll only be perfect when you do your planning. By the time you're ready to move in, it ain't going to be perfect anymore because something's changed.
That's right.
So there's no perfect house. So we have to now say, okay, let's find the optimal house. Okay, so what's optimum? Well, here's my analogy on maximum versus optimum. The optimum temperature is 98.6. The maximum temperature will kill you.
That's right.
Okay. So we're looking for the optimal house and the optimal purchase situation. Now, the optimal purchase situation right now are today's rates. Okay. Because rates are still excellent. Cash is going to be king. So preserve your cash for other opportunities that might be out there. All right. Do the PMI because it is really insignificant relative to what you're going to have to take out of your cash accounts.
That's it.
Use the cash for other opportunities to make more money. Buy maybe once you buy your house, look for a rental property. I mean, there's so many ways to use cash. A house may not be the best place for it, but you got to get a house.
You got to. So you start, Doug, I told you we needed to keep this, 10, 15 minutes. We can't, okay? Because you just brought up something that we have seen now for 3 years with this lower inventory. People are buying houses that they like instead of buying houses that they love. Okay.
Correct.
And I just did, and I've done rehab loans for years, but I just did another class last week on rehab loans. And let me tell you something, we're not using enough of them. We're not using enough of them. They can be used.
Oh,
The VA's got a rehab loan. I just learned that this week.
is
Shame
that a
on me.
203K?
Well, the 203Ks on the FHA side.
Okay.
But VA, we can get up to $50,000 on a VA loan for renovations, for repairs. Now, you know what?
And thank you to all of our veterans out there while you say VA loans. But anyway, go ahead.
Absolutely. So these rehab loans are great products to be able to use. If we find something that's not quite what we want, we can make changes.
Absolutely.
And so we need to be talking about that. And I'm going to do a whole series on rehab loans getting ready to start.
Good. Good.
So
Because
go ahead.
go ahead. No, go ahead.
I was just going to say, what's the best way to reach you and your team?
Well, the Lawrence team is always available at lawrenceteamhomes.com, or you can call our hotline and talk to any one of our expert agents, which is 423-883-1823. And that is our hotline number. If you call it, we'll have people picking up the phones and giving you expert information. That's how we reach you. And we know how to reach you, Kevin, but maybe some others don't.
That's right. It's the Kevin Blair team. My phone number is 423-488-7571. If you like this kind of information, hit subscribe, hit share, hit like. If you want to find out more information about my team, you can go to our About page. There's a form that you can fill out to set up a conversation with me. Doug, I appreciate you. Man, I can't tell you how much I appreciate you. Guys, again, if you like this kind of information, like it, subscribe, share it, and we do appreciate your support. No,
Good information.
tell everybody I said hello.
I'll do it. Come see us.